Mortgage scores. What exactly are they and why do they matter? Stay tuned. Mortgage scores. All right, so mortgage scores have been around for a very, very long time. And every single time that I am coaching someone on how to properly fix their credit, develop the best possible credit that they can in the time frame that they're looking for, and even how to buy their first rental property, I have to talk about mortgage scores, because everyone is under this impression that there is only one type of credit score. And so this is brand new to many people, the great majority of people that I speak to. And so it's incredibly important for you to understand some of the principles that go behind why these scores exist, and not only that, where exactly you can find them, and then how to fix these scores. So I'm going to have multiple different types of videos on this channel just dealing with mortgage scores to help everyone go from point A to point B, right? So they can accomplish their goals. So mortgage scores have been around for 20 plus years. FICO is the company primarily responsible for generating these scores. There are some talks that another company who's also been around since the year, I believe, 2000, that was created by the top 3 credit bureaus, that is Experian, TransUnion, and Equifax. Company name is Vantage. And they also generate some credit scores that are not currently being used by many lenders. However, apparently that may change in the future. So FICO is the leader right now, and they generate these mortgage scores, and they have a number to them. They have an actual number and a version. And the 3 types that they currently use are the FICO 2, FICO 4, and FICO 5. Each credit bureau uses one of those distinct types of versions. Now, FICO actually creates these models and then makes money off them every time someone looks at your credit. Yep, the credit bureaus are getting paid, Experian, TransUnion, and Equifax. But not only the credit bureaus get paid, actually FICO is also getting paid for generating these scores. So when you look at your credit report, many times you think that the score itself is being generated completely only by the credit bureau. No, there's a whole bunch of integrations that go into these credit scores. And so FICO is playing a major role, the credit bureau is playing a major role, and then the credit bureau is attached to a whole bunch of other platforms that they're pulling all this information from and then displaying it in an easy and nice view for you, and they obviously charge you for that. And by the way, it's the same for the lenders that you're going to be dealing with. They have their own platforms that they also use, and they get a tri-merge report, which in essence shows them the 3 credit bureaus along with the scores. But all of this is all connected again through the credit bureaus and FICO. So everybody wins and makes dinero, money. Now, it's incredibly important to note the mortgage scores that these lenders are going to see are specifically designed for mortgages. And therefore, your mortgage score may be different than your auto loan scores. So when you're going to go and buy a car and the lenders pull your scores, those scores are designed for the auto loan industry. It's the same when you apply for a credit card. FICO develops scores that are designed for them. Now, there is a score, which is the FICO 8 credit score, which is typically the most widely used according to FICO right now. That score is used many times in different types of industries also. So don't be surprised that you apply for something and they're using a FICO 8. Now, a great way for you to know, by the way, on the sidelines, put in mortgages just for a second, is if you actually apply for a credit card, before you apply, you can ask them, hey, like, which credit score you guys are using? And many of them will know, right? Many of the credit card companies will know, and they will tell you. So you can call them up and ask. Okay, so back to mortgages now. With mortgage scores, you want to keep in mind that there are some specific variables that will impact you more than other variables. And therefore, you want to be very careful with these variables. At the end of this video, I'm going to add another video that we recently did on how to increase your mortgage scores. There's 3 specific variables that you need to keep in mind there if you need to increase it. And not only that, but these variables are so important that if you get one of these wrong and you're about to buy a house, it can cost you thousands of dollars. Let me give you one as an example. Derogatory items. So one of the worst things that you can actually do with your credit is to go late on something. Even worse, going late before getting a house, before you actually apply for the loan. Oh my gosh, this thing will hurt you so much, and it can even cost you to lose a house. How so? I've seen this multiple times. Person is ready to get on a contract, the lender already pulled their credit, and next thing you know, they go late for some given reason. Their credit score drops from one point to another, and they're no longer able to qualify for that specific loan that they had. And many times they may just become disqualified completely depending on the type of loan that they needed at the time. And so this is incredibly crucial. This is why you cannot just depend on platforms like Credit Karma and some of these other free platforms to monitor your credit, because they're only going to give you a quarter of the picture, half of the picture. And many times they're going to give you completely the wrong score that you should be looking at for the goal you want to accomplish. So mortgage scores are important, are very important, and they're designed for the mortgage industry, and they're designed for lenders to approve you. Mortgage scores rely on some of the same variables, such as utilization, such as your history, payment history, and other different types of variables to properly generate your scores. Now, with the mortgage scores, there is one last thing that you also want to keep in mind. Your credit profile is based on different variables that can impact you at different times. So I'll get a good example. Someone who's just getting started in credit can actually get a very high mortgage score in a very short period of time by using some specific steps that I outline in the video I'm going to put at the end of this video for you, compared to someone who already has a good credit. As an example, we've seen customers within 60 days go from no credit to a 700 plus mortgage score. Yes, it's possible, and it's allowed in the industry. Just by following 2-3 steps, they can actually do this and get a very good rate for their house. So if you're starting from zero and you don't have any credit, and you're going to be buying a house, yes, you can get your mortgage score generated in less than 60 days, and you can actually get some pretty good rates. All right, and so understand that this particular score reacts a little differently than the other scores, and it's going to vary based on your credit profile, the age of your profile, and other variables. All right, so I hope this helped you understand some of the basic things that this score has and where it comes from, who generates it. And in the next videos to come, including the one that I'm going to add here, we'll give you some more details on how to begin to manage this score. All right, guys, with that said, I'll see you in the next video. Take care. Ciao.